Hey everybody. So this is a crazy market right now. Everybody's talking about it. It's probably the hottest market in history, at least in most of our lifetimes. And it can be really difficult to find the perfect home. So if you're going to find the perfect home, you really have to be prepared to move on it and move on it pretty quickly. Because in some cases, we're seeing homes hit the market, and as soon as they're on the market, they are being swooped right back off. So that means that if you're going to make an offer, you really want to be super prepared. And one of the things that you can do, of course, is be pre qualified and ready to rumble when you do get a place that, or when you find a place that you really want. So I kind of wanted to just go over the 10 commandments for home buyers. These are specifically related to things that are important when you're applying for home financing, a mortgage, and things that lenders really look at. So let's take a look. And by the way, I'm Holly. My husband is Timothy. We are Celebration Realty of Georgia with Keller Williams Linear Partners. And there's our phone number. So if you ever need to reach out to us, we'd love that. All right, so here we go. Let's dig in. What you say? All right, so there are 10 very important things to consider when you're going through the loan application process to obtain financing for your new home. Now, there's probably more than 10, but these are the 10 top boom items. You know, the whole drop the mic boom. So we got to look at these. Any one or any combination of these 10 things really can make or break your ability to get a mortgage. So we want to spend a good amount of time on each one just so you're clear, and then we'll wrap up at the end. So, commandment number one, thou shalt not change jobs, become self employed, or quit your job. That's a biggie. Lenders need to see a stable work history, and that's because they need to know that when they loan you money for a huge purchase, you have the resilience to pay back that loan. As much as you're taking a risk by taking on a huge debt, in this case, your mortgage, which is also probably your greatest asset, you do want to remember that they're taking a risk as well. And so, in order to look favorable in their eyes, you want to have a really stable history. If your work history is inconsistent or irregular, then they can presume that you might be inconsistent or irregular with your mortgage payments. So if you're looking at a potential career change, postpone it until after you've safely secured your financing, and not just secured the financing, close the deal, get moved in, settle in, and then potentially consider the new career change. It's very difficult to make a lot of huge changes all at once, so stack them. And for now, save the career change until after you've secured financing. And then only make such a move if it's going to enhance your ability to maintain your beautiful new home. You never want to take a step backwards. Always set yourself up for success at the next stage of your life. All right, so commandment number two is thou shalt not buy a car, truck, van, or any type of vehicle while trying to obtain financing. Applying for a vehicle loan impacts your credit pretty dramatically, and it also impacts your debt to income ratio, which essentially just means that you have less available money to go toward a mortgage payment because some of your assets are tied up in paying for your new vehicle. If you do need a new vehicle, and it's very likely that it's very possible that you could need a new house and a new car at the same time or pretty close to the same time, but you really do have to weigh out options like whether you need a new car or is it just you want one? And if you do really need it, do you need it or do you need a new house first? Which is most important? Chances are, if you get the new house first, then things are going to line up to get the new car. If you get the new car first, you're probably going to have to wait about the house for a little bit. You also want to weigh the option or the idea of how much it would impact your overall financial picture. Can you afford a new mortgage payment and a new car payment at the same time? And how soon is it that you're planning to buy a house? Again, if you go for the car first, then it's going to probably be a while before you could qualify for a mortgage unless you have a crazy amazing debt to income ratio, in which case it might not be a factor. But generally speaking, you don't want to roll the dice too much on that. And if you can wait until after you have a mortgage, chances are, if you were able to obtain a mortgage, then you'll have an easier time getting a vehicle loan rather than the other way around. Commandment number 3 is thou shalt not use credit cards excessively or let your payments fall behind. Using credit too much, whether in volume or in frequency, can really make the lender cautious about your spending habits. If you do use your card regularly, make sure to pay off the balance each month because your payment history is one of the biggest chunks of your credit score. And this means that if you happen to fall behind, it creates an almost instant drop in your score, and it can take months or years to recover from a delinquent credit history. So, as the old saying goes, an ounce of prevention is worth a pound of cure. And it's always better to err on the side of caution when it comes to credit during a loan application. Commandment number 4, thou shalt not spend money you've set aside for closing costs. Unless you have some sort of unusual situation, you will have things to pay out when you get to the closing table. And these costs have to be considered from the very beginning because they are necessary and they are not going to just magically disappear. No closing cost money means no closing, period. It's best to set your closing cost money aside, the money that you've been saving for this, and really just pretend it doesn't exist until you do bring it to closing. And then at that point, draw it out and move on with it. Now, if you keep it in an interest-bearing savings account, you get to keep anything it earns you. So that's awesome. Just remember that you don't want to dip into your closing cost money. Commandment number 5, thou shalt not omit debts or liabilities from your loan application. Huge, huge, huge. I really can't stress this highly enough. If you intentionally omit items on your loan application, once those things are discovered, and trust me, they will be, then you instantly lose credibility with your lender. The lenders are going to find out what you owe because they're going to pull your full credit report. And it's not like the credit report that you can see on certain credit monitoring websites in most cases. It's going to be a lot more in depth and it'll look at a lot of variety of debts. And they are going to see anything that you owe or have owed. So it's far more favorable to you to disclose any liabilities up front than for the lender to find out later on. It's always better to just be honest. Because as soon as they discover dishonesty about the true cost of your debts and liabilities, lenders can immediately deny your application, and that can at best delay your process because you're going to have to start the whole financing process all over with a different lender, or it can actually stop you from getting a loan. So stay honest, it's worth it. Commandment number 6, thou shalt not buy furniture for the new house or the old one for that matter. So, you know the old proverb or the old saying that you shouldn't put the cart before the horse? You have to have the one before the other. So, that's true here. It's totally applicable in this case. You don't have the house or the loan finalized until closing, when the keys are in your hand and you're able to drive to the new house and it is yours. That's the time that you can start thinking about when to get your furniture. Now, that doesn't mean that you can't dream. You can't think ahead and say, hey, I think I want to look for this or this. You can even kind of start looking and get an idea of what's out there, but don't go through with the purchase yet because, like I said, you don't have the house finalized until closing. There's always going to be time to get what you need when you move in. And this is important because purchases and leases of furniture impact your credit score, and they also impact your debt to income ratio, a lot like purchasing a new vehicle. Commandment number 7. Thou shalt not originate any inquiries into your credits. The season in which you're trying to obtain financing for a new home is not the right season to apply for new credit cards or personal loans from a bank. Even if you are approved for those items, it does ding your credit for a period of time. And during the loan application process, you want to protect your credit fiercely. Keep reminding yourself that the loan application process and the purchase process, although they might seem to last forever, they really are a short period of time in the overall time that you're going to be in your home. So you have to ask yourself, is having a new home worth waiting for all those other things? Commandment number 8. Thou shalt not make any large deposits without first checking with your loan officer. Large deposits raise flags with potential lenders because the lender has to question their source. If you have disclosed a certain amount of income, but all of a sudden you're making these big deposits, they have to know where that's coming from. So, in other words, the money had to come from somewhere. It could mean you have a new job, a second job, payment from other sources. Maybe you sold some item that you own, something like that, which could indicate income that you did not disclose. But it could also mean that the money was loaned to you by a source that wouldn't show up on your credit report. Think your rich Uncle Fred or something like that. And certain sources of income are not permissible as well. Like you can't get money from the seller, you're not allowed to have money from the agent or any party to the transaction involved in the financing process. And it also could be that the money was given to you as a gift. And that's sometimes not permissible with some loan types because such gifts could actually be construed as loans. And it's a really sticky gray area that could cause problems later. So, no large deposits without first checking with your loan officer as to whether it's okay or disclosing where the money came from. Commandment number 9. We're getting close to the end here, folks. Number 9. Thou shalt not change banks or bank accounts. If you have been considering changing your banks or opening a new account, this is not the season to do it. It can wait. There will be time for that later. Lenders are going to require a few months of bank statements in their consideration of your loan request. So if you're giving them information from a new account, it looks as though your banking history is very short. And that could result in some important transactions also being omitted from the statements used to verify your eligibility. So for example, if it's a brand new account and you haven't had your direct deposits from your work input or deposited into your account yet, then they're not going to see that. And so there's no proof of your income. So it's important not to change banks or bank accounts during or even immediately before the loan process. And now we've made it to commandment number 10. Thou shalt not co-sign a loan for anyone. You know that whole procedure of when you're on a plane and before you take off, they go over all of the emergency procedures just in case something terrible happened. And they tell you when the oxygen mask drop to put your own mask on first before you put it on your children or someone who's with you who might not be able to do their own. So the same principle is the same here in this case. Co-signing a loan can put you at a risk of not obtaining the resources you need, while the person that you co-signed for takes on a risk he or she obviously was not able to manage independently, or they would not have needed you to co-sign in the first place. So maybe a better way to help the person asking you to co-sign would actually be to sit down with them go over their finances if they feel comfortable having that conversation with you, which I would think they would if they're asking you to make yourself a party to liability on their behalf. But maybe go over their finances to help them build a strategy to improve their own credit or something like that. But the overall goal is that you have to keep your own finances in order first. That's not selfish. That's actually a survival and not just a survival skill, but a thriving skill. Because as long as you are protecting your own finances, you will be able to help other people when the time is right. So, in review, let's take a look at all of the commandments in a quick list. Number 1, thou shalt not change jobs, become self employed, or quit your job. Number 2, thou shalt not buy a car, truck, van, or any type of vehicle while trying to obtain financing. Thou shalt not use credit cards excessively or let your payments fall behind. Thou shalt not spend money you've set aside for closing costs. Thou shalt not omit debts or liabilities from your loan application. Thou shalt not buy furniture for the new house or the old one for that matter. Thou shalt not originate any inquiries into your credit. Thou shalt not make any large deposits without first checking with your loan officer. Thou shalt not change banks or bank accounts. And thou shalt not cosign a loan for anyone. And that kind of just wraps this whole thing up. And I really hope this has been helpful. And we just happen to believe that if you're really in the market, you're really serious about it, then you deserve the opportunity to set yourself up for success. And ultimately, we believe, this is just our belief system, that where there's a will, there's a way, and there's a reason it's spelled that way. You can check out our website for more. But we would love the opportunity to help you find a new home worth celebrating. And again, we're Holly and Timothy Von Wald from Celebration Realty of Georgia, partnering with Keller Williams Lanier Partners, and it's just a great group of people. And there's our phone number if you ever need to reach out to us. We would be more than honored to walk you down the road toward your new home.